Hi, Thomas Castelli here, and in this video, I'm going to answer the question, do you need to meet a separate material participation test on each one of your short-term rental properties in order to use the short-term rental loophole? And I'm going to answer that and break that all down for you in just 1 second. But before I do, if you do like this video, make sure to hit the subscribe button and the bell icon so you don't miss out on future tax smart releases. And also don't forget to hit the like button to help get this video into the hands of more real estate investors and help them become tax smart. All right, so do you need to meet a material participation test on each one of your short-term rentals, or can you group them together and meet a material participation test on the entire grouped activities for the purposes of using the short-term rental loophole? And the short answer to that question is yes, you can group your short-term rentals together as one economic unit under section 1.469-4 when certain criteria are met. And those criteria include similarities and differences between the different types of businesses. So if you have multiple short-term rentals, chances are they're pretty similar businesses, wouldn't you say? So for the most part, many people are going to check that box. All right. Second one is the extent of common control. So you might not always own 100% of all your short-term rental activities, but you might have the right to actually make management decisions and control the operations of the property. So if you meet that criteria, great, go ahead and check that box. Number three, the extent of common ownership. So again, you might not always own 100% of all your short-term rentals, or you might own 100% of your short-term rentals through various entities. So is there common ownership? That is a question. That is one of the criteria. The next criteria is geographic location. So do you have all of your short-term rentals within the same geographic area, or are they spread out across the country, across multiple states, or perhaps different regions throughout the world? All right, so that's a question that has to be answered. That's one of the criteria. And the fifth one is interdependencies between the different businesses. So in my experience, there generally aren't too many interdependencies between one short-term rental and another. So many times you're not going to be able to check that box. But the good news is that not all five of these criteria that I just mentioned need to be met. However, the more you can meet, the stronger your argument to group your short-term rentals together under this election under section 1.469-4C. The best part is once your properties are grouped together, you only need to meet a material participation test for the entire activity, the entire grouped activity, and you don't need to meet one for each and every individual property. If you use this grouping election for your short-term rental properties, drop a comment in the comment section to let us know. Also, if you do want to join in on the conversation, we are always answering questions like this in our Facebook group. So you can head on over and join that Facebook group by going to www.facebook.com/group/tax-smart-investors or by clicking the link in the show notes below. And we'll see you on the next episode of Tax Smart Q&A.